maybe options trading isn't that complex. It doesn't have to be complex. I first started options trading in 2008, so this is my 12th year doing options trading. And in this video, I'm just going to talk about my own personal trading life. How it's been very different today compared to what it was when I first started in 2008. And I hope that through this video, those of you who would want to start doing options trading will start to have a more realistic picture of what it really means to be doing options trading, how much time it really entails from a day-to-day basis, how complex the strategies really need to be. I can say with a fair amount of certainty that it's not really what beginner options traders think. I don't really have to use very complex options trading strategies every day. In fact, I rarely ever do. Most of my trading strategies are honestly very simple. I think there's a misconception out there that options trading has to be very complex, and then we use all sorts of very complicated strategies. Really, the aim of this video is just to give the beginning options traders an idea of this is basically how my options trading style has evolved over the past 12 years, and to set some more realistic expectations and hopefully more optimism for you guys. In 2008, I was 28 years old. It was at that point whereby I had a little bit of savings and I thought, okay, it's time I want to learn how to do a bit of investing. Before that, I had almost zero idea what investing is. I didn't know anything about fundamental analysis, much less trading or technical analysis. I really wanted to go to a course to learn, and that's what I did. Being completely new to it, when I saw technical analysis, I thought, wow, that's quite a crystal ball. With technical analysis, I could see I can predict how the stock goes up, how a particular stock goes down. And basically, I would make $1 million just by using these tools to be able to make those kind of judgments, make those trades. In that same course, there was a particular chapter of the course that was dedicated to using options. The aim of using options in that course was really as a leveraged instrument for making investment decisions. It was a leverage tool for investments. It wasn't about options trading at all. It was just a stock replacement with leverage. You applied fundamental analysis to Apple as a company, right? So instead of buying Apple stock, we buy long call options in Apple. And if we are right, we get a lot more leverage with options, and therefore we make a much higher profit. At the same time, emphasizing the fact that options has a limited loss, so we know what our defined loss is. We won't lose anything more than what we have invested. One of the best instruments that we were taught to use was to use leaps. Leaps are long expiration options. So I could buy an option today that will expire in 2 years' time. I bought those options thinking I'm going to make it rich in a couple of years' time, and this is just simply investment. And I remember thinking I'm smarter than Warren Buffett, because then I would be doing exactly the same thing Warren Buffett does, but with a leveraged instrument, and I'll make many more times what Warren Buffett could have made. This was in May of 2008. We all know what happened in 2008. By September, the market basically cratered. Everything went on the drain. I started out with a $6,000 account, which is very small at that point in time. I barely started working. By the end of the year, my $6,000 account was left with only about $2,000. So I stayed away from the market for the next 5 years. All this while, from 2009 to 2013, I stayed away from the market. I've been accumulating a little bit of savings as I went along. Thankfully for me, by 2013, I decided, okay, let's get back into this. In 2013, I decided, okay, now that I've known a little bit of investing, I keep hearing so much about trading, let's learn trading. So I went for another course this time. This time, it's a trader's course. Once again, there was one chapter in the entire trading course on options. Again, it was taught as a leveraged instrument for us to go long or to go short. I began using options once again, but this time on a much shorter time frame. I was trading things that I was doing swing trading, where I enter a position on Monday and I expect to get out by Friday. This time I was using a lot of technical analysis in the short term, right? Again on candlestick patterns, again on breakout patterns. In 2014, after almost a year of doing that strategy, I realized that I wasn't making a lot of money. In fact, I don't think I was making any money at all. My wins and my losses basically equaled up, and the only people making money was the brokerage firm. It was just day after day of trading, pushing money back and forth, and I ended up with pretty much less than what I began because of all the commissions. I chanced upon earnings trades. Now, I already knew that there was such thing as earning releases, and I knew that the trade could jump very much the day after the earnings was released. Why don't I just buy a straddle the day before the options is released? A straddle would mean a big move upwards or a big move downwards. I would make money. The only way I would lose money is for it to just stay where it was and not move. I thought it was a complete no-brainer. When the earnings was released the next day and I saw my positions, I noticed something strange. I noticed that my straddles, which I thought was a no-brainer, isn't making money at all. In fact, most of them were losses, and I just couldn't understand why. I couldn't understand why. I don't get it. Luckily for me, I was keeping a blog. I was writing my blog at a particular point in time. The blog was meant for nobody to see, actually just for myself as a self-reflection. But there was a senior whom I now call a good friend. He saw my blog. He just happened to ask like, hey, you're buying straddles on earnings? And this senior, by the way, his name is Jay Toon, who now runs his own course. I highly recommend you check out his courses. Jay said to me like, don't do that, man, because you need to know about this thing known as the volatility crush. I've never heard of the term volatility crush. And he said, check out this thing known as the volatility crush. When you're buying a straddle right before the earnings, that's where implied volatility is the highest. The day after, when the earnings is released, implied volatility will get crushed. I got curious and I decided, okay, I need to learn more about this. I went to study it, and that's where I bought this book that really made a very big difference. So for the next couple of months stretching into 2015, I bought this book, which is Ron Ianieri's book on options trading. I finally understood what implied volatility is, and I finally understood in much more detail what the Greeks can do for me. And that was where I also understood what a volatility crush is and why I was losing money on earnings trades. In that same year, in 2015, was when I found Tasty Trade. There was just so much information there that was useful for all of us, and I just kept absorbing more and more and more of Tasty Trade's teachings. That was why in 2015, my entire options trading strategy changed. I was no longer an options buyer, but I became an options seller. So in 2015, my strategy started to go towards neutral options. I started selling strangles on companies like Apple, Walmart, and all sorts of stocks. I was doing that for a year and a half to 2 years, and fast forward to 2017, I was profitable this time, but I wasn't very profitable. The problem was that I was making too little money from selling strangles, and the margin requirements for selling strangles on those stocks is just too high. And that's where again, from Tasty Trade, that's where I learned about futures options. I always felt that futures were dangerous and I didn't want to touch it. I knew that was highly leveraged, but the honest truth was that I didn't understand futures enough. I didn't know what futures really were. The first few futures options trades that I did, again, were on strangles, just naked strangles, and I chose the smallest futures products that I could find. Things like natural gas, NG, corn, ZC, wheat, ZW. And what I really realized was that the buying power reduction on futures options was so much smaller. So which is why I decided, hey, let's just do more futures strangles. I'm using less of my capital, but I'm getting similar amounts, if not more premium on the return. 1 year later in 2018, this is when I realized that futures options trading was the way to go. I no longer did any stock option strangles at all. In fact, I started to regularly do these 9 futures products and always selling strangle on them. There were natural gas, wheat, corn, soybeans, crude oil, gold, 6E, which is the euro, ES, which is the S&P 500, and bonds, which is ZB. So these were the 9 of them. And I regularly, in fact, I always had strangles on these 9. My strangles were 17 delta strangles, completely naked. I always had all 9 at the same time. I was taking a bit too much risk. In December of 2018, the market started to tank. That's where I realized that many of these futures options that I was trading, many of these futures that I was trading were correlated to each other. For example, wheat and corn and soybeans, they were correlated. Let's talk about the amount of time and complexity that I'm spending on my trading at this point in time in 2018. The amount of time I spent options trading was very little because I already knew that these were the 9 that I wanted to trade. There wasn't anything else that I wanted to trade. It was just this 9 over and over again. Put a strangle. Once it reaches my time target, out I go. Put another new strangle in place, rinse and repeat every single day. Therefore, I didn't really have to spend much time at all. The complexity of my trades were also very, very simple. It's always the same strangle, just rinse and repeat. It was really as simple as that. Now, in 2019, because of the big losses I experienced in December of 2018, I decided, okay, I'm going to reduce the correlation of my portfolio. I decided I'm not doing wheat and corn and soybean. If I'm going to do a futures on agricultural products, I'm just going to stick with soybean and that's it. I decided I'm not going to do bonds because I'm already doing gold. I was then left with only 5 futures products. Natural gas, crude oil. By the way, natural gas and crude oil are not correlated to each other. There's gold, there's soybeans, and then there's Euro futures. because I have less futures positions on, I decided to increase the size of each of these futures positions. And 2019 turned out to be the best trading year I've ever had. I made 34% return on investment in 2019, and things were going fantastic. So that's where I also started digging into using ES as covered calls. And as you know, covered calls are even simpler than Strangles. So the complexity of my trade started to go the other way. It's starting to get even more simple. Again, the amount of time I'm spending on my market trading is even less than before. So now it's July of 2020. I have Strangles on futures, which is the same. I got covered calls in ES, which is what I started dabbling in last year. But I'll be honest, this is a tough year for me because of the crash, the COVID crash earlier in February. I am not optimistic on the market in general. I am not bullish at all. In fact, I am bearish. So I don't think I'm going to open naked Strangles, which means to say that I would have less Strangles moving forward, at least for 2020. Then I might start to increase more of my covered calls if the market starts to tank a bit more. So you can see that the complexities of my trade is really getting less and less complex over the years. Now, what about the time that I spent doing my options tradings? I'm only monitoring the market for about 20 minutes to half an hour, and that's it. I don't really need more. I basically take a look, how's my positions? Do I need to close it? Do I need to open it? Do I need to say anything else? And really, that's it. You know, maybe options trading isn't that complex. It doesn't have to be complex. True, there were more than 10 years of accumulated experiences before I can reach this particular stage. I'm in no way saying that it's easy. I want to tell you that the complexity of the option strategies is not very high. In fact, it can be very low. In fact, it's so simple that it's silly. The amount of time I spend in the market is very low too. Hopefully, this video gives you a little bit of optimism to let you know that anybody can do it. It will not take you a lot of time. It will not pull you apart from your family if you don't want to. I hope to see more people start to get into options trading. Ultimately, I think it's good for everybody. Yeah, so that's it. Have fun.